It's Monday, 30th of July, and you're back in business with me, Harsha Subramaniam. India has a new president, so is it time now for the government to roll up its sleeves and kick in the much-expected reforms and kickstart growth? And is it time for the Reserve Bank of India to be cutting interest rates? Joining us to discuss all these macro issues, Jerry Rao, Chairman, Value Budget Housing Corporations, now joins me. Jerry, many thanks for joining us. We're talking at a time when India's growth has slowed down and there are pressures on the fisc. What is your own assessment of growth, and why do you think we've slowed down?
I'm quite pessimistic. I have a feeling that there's a very good chance that our growth rate can actually drop below 5%. We assumed that the UPA would be a pro-growth government. It's turned out to be anything but that. They inherited a very good growth rate, burgeoning fiscal revenues, declining fiscal deficit, a mood of optimism in the country. The very first act, we should have figured it out right then. The first act they did was they shut down the disinvestment ministry. That should have given us a signal that there is going to be a backtracking. And I think a lot of it has been blamed on coalition stuff. I don't buy that. Telecom, for more than almost 2 years now, it's been under the Congress party, and we still don't have a telecom policy. And I think the last budget really gave clear signals that productive entrepreneurial investment activity is actually treated with some disdain by our present dispensation. And, if you don't invest this year, your growth rate is bad 3 years from now.
Well, Jerry, there are clearly two views. One about consumption, that's still fairly robust. If you take a look at the numbers of Levers or Britannia or HDFC Bank. But if you look at the investment spending by corporates, that's completely absent. Manufacturing, infrastructure, anything that's closely linked to government policy is not seeing any movement. Are you seeing this dichotomy?
There is no dichotomy. This happens all the time. Consumption, you can always pump up. You have an inflationary situation. Post Lehman Brothers, we injected a hell of a lot of money into the system, which was the right thing to do. We did a lot of fiscal incentives, and that has, with a lagged effect, that continues to give you a decent consumption base. But investment is your predictor for future GDP. So right now, because of past fiscal or monetary conditions, we are with a lag seeing decent consumption. Let's not get carried away. I mean, it's not looking good.
All right. The Prime Minister has taken charge of the Finance Ministry. There are expectations that the government will act now on reform measures. Do you see that happening?
Quite frankly, I'm not. I am quite pessimistic. The track record seems to be always to appoint one more committee or to defer matters. I don't see anything dramatic happening. And I don't see investors, markets, ordinary citizens getting convinced of the credibility of these reforms. One of the important things, either in 1985 or the 91-92 Narasimha Rao, Manmohan Singh reforms, was there was some credibility. And therefore, and even then, it took several years. I mean, it's not as if our growth rate shot up in 1994. It didn't. It takes a long time. And some of the damage that this current government has done over the last 8 years is deep damage. So it's going to take us many years to dig ourselves out of it. And I'm not very hopeful. I'd like to believe that something nice will happen because as a citizen of India, I'd like our growth rate to go back. But as a betting person, one should say there will be one more deferral, one more committee appointment, one more statement of optimism from economic advisors, planning commission members, etc., which we all discount because they've become almost laughably absurd.
All right. So what about interest rates, Jerry? Do you expect interest rates to be cut soon? Corporate India has been asking for it. Inflation has cooled off a wee bit. Do you believe interest rates will head south?
Well, I am not a votary of lower interest rates. I think our central bank, Reserve Bank of India, is doing the right thing. we can create another bubble for a short 2 or 3 quarters by dropping interest rates and create more problems going forward. We are stuck in a classic declining growth rate, high inflation rate situation. They're doing the right thing by keeping interest rates up. Unfortunately, they need support from the fiscal side, which is not coming. So you're trying to fight a battle with one hand tied behind you. I am not at all in favor of a cut in interest rates, and I hope it doesn't happen. I don't think it will. By and large, our independent institutions in this country, like the Reserve Bank of India, have been homes of sobriety, common sense, and I think they will continue to maintain that.
What about the rupee, Jerry? It's fallen about 20% in the past 4-5 months. It's stabilized a wee bit right now, but has the volatility affected the decision-making of corporate India? Do you think the Reserve Bank of India could have managed this volatility better?
There's 2 separate issues. One is the absolute depreciation, which I think is the best thing that has happened. So the depreciation, in my opinion, is a good thing. It was inevitable. We have got a huge current account deficit, which is financed by capital account inflows, and we did our best in the last budget to discourage capital account inflows. Not only in the last budget, in the last 3-4 years, the way we've dealt with Ken Vedanta transaction, the way we've dealt with POSCO, all of these, we've done our best to discourage foreign investment, and therefore a depreciation of the rupee was inevitable. It's good. I think it'll help some exporters. It'll certainly put some brakes on import-led consumption. Now, as far as volatility is concerned, when Cooperative India complains, I think they're not complaining so much about volatility. They're complaining about absolute depreciation because a lot of them borrowed in foreign currency, thinking this would never happen, and foreign currency interest rates were low. Now, you do these kind of silly things on your balance sheet, you have to pay a price for it. You cannot assume that you can borrow in foreign currency at a low interest rate and not face the risk of depreciation, devaluation. So it's really a largely self-inflicted problem by several Indian corporates, encouraged by irresponsible bankers.
All right, let's talk about a sector that's close to you right now, Jerry, is real estate. What is your own outlook on prices, specifically in the affordable housing segment that you operate in?
It's again pretty bad. I mean, I'm sorry to sound uniformly kind of pessimistic on your show. I've been now in this business a little more than 2 years and kind of studied it fairly extensively. And net, the conclusion I've come to is that the government of India, as well as all our state governments, are basically anti-poor, anti-middle class. The entire residential real estate sector is rigged in favor of the rich. If you or some other wealthy TV anchor like you wants to build a 20,000 square foot farmhouse outside a major Indian metro, you will get approval in 15 days and you can build it in a year's time. But if I want to use the same 2-3 acres to build a couple of hundred flats for India's emerging middle class who desperately need housing, it'll take me 2.5 years to get approval. And 2.5 years when I have to fund the land with my highest source capital, equity capital, so costs keep going up. So it becomes very difficult to sell at an affordable price point. To start a small development, you need 35 approvals, and each of which is sequential, or many of them are sequential. You keep running from the town planning to the collector's office to the panchayat's office. You keep going round and round and round, and it takes forever and ever and ever. There's no transparency. There's huge transaction cost incurred, and all this ultimately means that the price point offered to the end consumer goes up. Added to that is inflation. Selective inflation in the last 2 years, particularly in cement and steel, has been ridiculous. I mean, we've talked about doubling of cement and steel prices. You're not talking about 7 and 10% in inflation in these commodities, and they're very key for construction. So it's really going to become more and more difficult for middle class India to own homes unless we do some drastic changes, which I am not very optimistic.
Well, Jerry, wealth and TV anchors just don't go together. I can't let you go without a quote from Shakespeare that recaptures your own feeling about the economy right now.
The fault, dear Brutus, is not in our stars, but in us that we are underlings. Cassius says this to Brutus when we try to talk about some extraneous factor keeping us down. No, what keeps Indians down is, as I said, a kind of national ability every time things are going well for us. When we look really, if you had talked to me 4 or 5 years ago, I'd have said, by God, in my lifetime, mass poverty would have disappeared in India. I'm 60. I don't now believe that's going to happen. It might happen in my son or grandson's lifetime. I think we've lost.
On that not so optimistic note, Jerry Rao, many thanks for joining. As always, a pleasure talking to you. Find us, follow us on Twitter @HarshaInBusiness. Thank you for joining us in Business Today.